Hello everyone, welcome to this higher time frame case study session on NQ and Bitcoin. In this video, I will be giving you an overview of what's happening on these pairs and what has actually happened on these pairs over the last few weeks and how you could have approached out of that price action with a logical framework and with a refined perspective, right? So basically, this video will give you some insights to how you could analyze the higher time frames of these pairs and charts and how you could replicate this exact thought process on any other assets or time frames. Now, the overall core concept remains the same, and in this video you will see what each time frame is used for and how you could use the higher time frames to first of all generate a higher time frame narrative, and to determine your higher time frame drawn liquidity, both short-term drawn liquidity as well as long-term drawn liquidity, right? Now, if I talk about myself, then I only trade the euro dollar or EU for trading and only trade that pair. But there are some students who have been requesting to me to make breakdowns on these pair. So I've decided to share this video with you here, right? Now, I also do analyze the higher time frames of these pairs and assets from time to time, just to be aware of what's happening on all of these major financial markets. But when it actually comes to trading, I strictly trade only the euro dollar, right? Now, if you watched all the trade breakdowns on EU, then you'd see that I use that exact same framework and thought process here, right? Even on these assets and charts, which indicates that these concepts are fractal and they work on all assets and time frames, right? Now there are some differences on the intraday charts in terms of time, but the higher time frames overall for all of these assets follows the same process and framework, right? Let's get into the breakdown or case study. First we're gonna start off with NQ, and we're gonna start right from the monthly chart, right? The monthly chart is usually where I start my analysis at the start of each month or each week, right? There isn't a lot to do here, but it does offer me a wide perspective about what price is doing, where it is at the moment, and what is it trying to do, and what is trying to tell us, right? Also look for key levels on the monthly chart and look at it with the perspective based on market profiles and dealing ranges, uh, that tells me what price is trying to do, right, and where price could potentially be headed to. Now, I also look for key levels on the monthly chart that could also potentially be refined down to the weekly and the daily time frames, right? Also, before we move further, we know that this week will mark the end of level 2 of CPI, right? The first two levels, we mostly discuss the price aspects of charts, how price moves, what are key levels, how they're formed, and what are entered in weekly profiles, right? We discussed almost every aspect of price. Now, next week we will start level 3 of CPI, right? And level 3 will particularly deal with time, with the time aspect of charts. And we'll learn how time influence moves in the markets and how can you catch timely expansions or reversals in the markets and how you could use time to assist you in your analysis and trading, right? So the point is that each level of CPI will focus on a particular thing and they are already pre-planned, right? And I've organized it in the most refined and proper way possible. Similarly, moving to the next levels, we'll learn about integration of time in price, and then I'll show you different entry models that you can use to trade CRT and turtle. We'll discuss CRT to its core details and intricacies and CPI, right? Along with that, I'll also give you a framework for how you're going to be objectively doing your higher time frame analysis and thought process. In the same manner, I'll give you a framework for lower time frame thought process, and then we'll learn about how to combine and integrate both of them together, and so on, right? Similarly, at the end of level 7 of CPI, we will deal with the execution in the psychological part of trading, and we will learn about different risk management plans, different trade management plans, and how to actually journal properly, right? And how to backtest and how to execute properly We will discuss all of these aspects in detail in later levels of CPI, CPI. And then last but not least, my trading plan and routine. And there will also be a few one-on-one session with some of the students, right? And then that will mark the end of CPI. And I can assure you that almost all of you will be independent traders at the end, and I mean it, right? Now, enough of that. Let's get in the case study and let's see what we've got on the monthly time frame. So on the monthly chart, what you need to remember and write down is that you don't have to look all the way back, right? You don't need that. You just have to analyze the current price action of the last 8 to 10 candles and just look at what the latest price action is telling you. And then you have to potentially determine where the current monthly candle or the next monthly candle could potentially close, or where it could be headed to, right? You have to look at the open and the close of the monthly candles and also consider significant swing points where price could expand to or reverse from, right? You will also look for candles as CRTs, and then those CRT will guide you towards the correct drawn liquidity and potential areas where price can face invalidation or opposing liquidity. You would be looking at the monthly charts with multiple concepts such as quarterly shifts, EBITDA data ranges, dealing ranges, the open high low close concepts, the power of three, and so on. We will discuss all of these in level 3 and level 4, right? Now you will determine your drawn liquidity based on these factors, right? So right here you can see that since the start of the year we've been making new all-time highs, and we kept moving higher to make new highs. Now obviously we know that according to market profiles, price usually tend to have retracements and the ranges before price make new expansions or new higher highs or lower lows, right? Similarly, right here you can see that the June's monthly candle had this expanding candle, right? And price closed above to make a new all-time high. Now, to figure out where this candle can be taken as a CRT and can be treated as a CRT, you're going to look at multiple factors. You're going to look at the price action of the next monthly candle, and not only that, but you'll also have to see how it's purged and at what time it's purged. And along with that, you'll also have to look at the lower time for price action to say to see whether there is a lower time for confirmation making this CRT a valid one, right? And whether are we seeing signs of reversals on the lower time frame. And once all of those things align with each other, you will take this monthly candle as a CRT, and your target and your drawn liquidity will be the monthly candle's low, and first of all the 50% of this monthly candle, right? And then eventually the opposing end of the range, which will be the CRT low or the monthly candle's low. Now, to consider a monthly candle or a weekly candle as a CRT, there must be all of those factors behind it to actually make it valid. The open, high, low close of the next candle, the timing of the purge, the framework of that purge, and how is it purged on the lower time frame or the time frames below it, right? And what sort of market profile we are in, and what is the dealing range telling us, right? All of those factors will lead you to being confident in your higher time frame analysis and thought process, and will lead you to gain conviction in what you see and what the market is telling you. So right here, this monthly candle had all of those factors behind it, right? That's why I took this candle as a valid CRT, and I determined that the drawn liquidity is now the 50% of the CRT and eventually the low of the CRT. Now let's go down to the weekly time frame and let's see how you could have analyzed these charts on the lower time frames, right? Now, right here again, if you look at all of this price action in terms of market profiles, then you'd see that we started off with a range, and then after that range we had an expansion, and then we know that after each expansion we can either have a range or a retracement before moving higher. You can see we have a retracement here, and then after that retracement ends we've got another expansion higher right here, right? Now, obviously, after this huge expansion, we cannot have an expansion right away. we must either have a ranging profile or a retracement profile or a reversal, right? And in this case, we had this kind of reversal on the lower time frame or this retracement on the higher time frame. Now you would have expected this reversal on the lower time frame and you would have traded all the way till the CRT low is taken out and the drawn liquidity is reached, and you would have had multiple weeks of price action where your drawn liquidity would have been on point, and it would have been correct, and you could have easily profited off of it, right? Now another thing you can see right here is that this monthly candle CRT, right? If you look at it and if you look closely here, then you'd see that it was purged with this big bulky candle. The monthly candle height was taken out with this weekly candle, and now that weekly candle in itself could be treated as a CRT, because that candle purged a higher time frame CRT, and it's a big one, right? It's an expanding candle, and more often than not, such types of candles eventually ends up being CRT. What happened is that we also purge this weekly CRT, and after that, you know that you now have enough confirmations to first of all target the low of the weekly CRT and eventually the monthly CRT low, because all of the factors are pointing towards and turning towards that particular direction, towards the lower one, right? Another thing right here you can see is that after we reach the drawn liquidity for this weekly CRT, we also closed below it, right? And based on key levels, you can see that this particular candle, this particular CRT purged liquidity in the form of purging the monthly CRT or this range high on the weekly, and now price closed below it, below this candle. So you're going to use this candle as a CRT. Now you're going to use this CRT and this candle as an order block, right, for NQ to push price even lower towards the monthly CRT, because this particular candle to purge liquidity and then price closed below it, so it becomes a valid order block. First of all, we had the CRT, then price closed below it to form this key level in the form of this order block, and then price tested that order block in key level and push lower towards the higher time frame down liquidity, which is the monthly CRT low. One important thing about CRT that you need to write down is the highest probability CRT are always formed above range highs and below range lows. Now make sure to backtest this exact thought, and you'd be amazed to see how accurate and precise this is, right? Let me say it again. The highest probability CRT are formed at range highs and range lows, and they usually tends to purge liquidity or fill liquidity, right? Now you can see that right here throughout all of these weeks, your drawn liquidity would have been lower, and you would have had 5 weeks of price action where you would have had correct drawn liquidity, and just imagine how much you could have profited off of it, right? Now there are different ways to exploit all of this, and we will learn that in CPI. Now let's move over to the daily time frame and let's see what else we got there. Now right here the price action is pretty clear, right? After the purge of the monthly CRT, we have the sequence where first of all we got the order block entry, then the breaker entry right here, an OTE, and then last but not least we've got the kiss of death or the KOD entry here, because price almost took off liquidity, but then it had this counter turtle support, this counter liquidity was taken, it was purged, and then we expanded lower again and had this case of death or KOD sequence, and then eventually we took out the monthly CRT low, and we reached the drawn liquidity. Here on the daily time frame, you would use the same concepts and the same logical framework to predict the direction of each daily candle, right? And you would use market profiles, dealing ranges, predator ranges, key levels, and so on to assist you with that, right? Okay, so right here we've got the Bitcoin monthly chart. Now again we're gonna be using the same logical frameworks here, the same one we used for NQ and Euro dollar, right? And we'll see what the market is telling us and what is it trying to do. We're not gonna force anything on the markets, right? We're just gonna use what the market have told us, and we're gonna make decisions based on that, right? So we're gonna start off by looking at it with first market profiles in dealing ranges, and then we're gonna see what sort of story are they telling us based on these concepts. So right here you can see that we've had this huge expansion above, and with it we made another all-time high on Bitcoin. It's pretty self-evident, right? Now, obviously, again, before we make another significant move, we got to first either form a range or retrace back to the equilibrium of our dealing range before we could move higher, right? Now, a retracement profile or a ranging profile is highly likely after an expansion. So after this new high is made, we'd be expecting price to either form a range or a retracement before it to move higher. Now we cannot decide if it's going to be a range or a retracement at first, but then as price keeps printing and new price action forms, that will guide us and tell us what could potentially happen. Now, also along with that, we can see that we've got this expansion swing as a dealing range as well. And right here, we've got the equilibrium of this dealing range. So if we are expecting a retracement, then this 50% or this equilibrium region of this dealing range is a high probability area for price to retrace to, right? And right here, you can see that that's exactly price went for and reached to, right? It's almost as precise and accurate as it gets, right? You can see price exactly hit that point and then it retraced from there. Right here, first of all, I took this candle as a CRT because right here, first of all, I took this candle as a CRT because it formed this effigy and I thought maybe price can take that candle's high and then retrace. And for this whole month, I had a correct on liquidity, but then price struggled to take that high and it started reacting to this rejection block. So I changed my mind and adjusted to the new conditions and expected a retracement profile, and that's exactly what happened. Now remember, there are going to be times where price doesn't respect these concepts and just does whatever the hell it wants, and it's inevitable. You cannot avoid that. But what you can do is embrace those things, and instead of letting them mess up with your head and ruin your performance, you should accept them and just embrace them instead of aiming for perfection, right? The best traders I have known, the best traders I've seen have losses. Every single profitable trader has losses. But what makes them unique is the fact that they don't let losses mess up with their head and just accept them, because they know and I know that I can never have an edge that offers me 100% accuracy or precision. There will always be some margin of error, and that's unavoidable and that's inevitable. But over a long period of time and over a long track record of data, you will always end up being profitable because the edge will always be in your favor, right? That's something you must accept in order to succeed.